In wills and probate work, accuracy matters, and time is of the essence. Designed for UK private client law firms, Leap's all-in-one legal software automates wills, probate and estate administration, supporting compliance and growth without increasing overheads. Learn more at leap.co.uk.
You're listening to the Today's Wills and Probate podcast, one of the leading sources of information for the wills and probate sector. Don't forget to subscribe and sign up to our free newsletter at todayswillsandprobate.co.uk and follow us on LinkedIn and Twitter.
Hello, welcome along to the latest Today's Wills and Probate podcast. Today we have John Sanderson, Director of Partnerships at Provira, on to discuss inheritance tax loans and, lending in general around later life opportunities and probate opportunities as well. Provira, a lender in this space. Great to have you on the podcast, John. Thanks very much indeed for joining.
Yeah, well, thanks for inviting us, David.
I said that Provira are one of these lenders that have kind of started to pop up in this space around lending at a kind of a really difficult point in time for people, whether it's sort of probate or in inheritance or even sort of beneficiary loans. And you're going to explain some of the differences between those products in just a second. But maybe before we dive into all of that, tell us a little bit about yourself and your background, please, John.
Sure. Yeah. So as you said, I'm Director of Partnerships here at Provira. I'm responsible for growing and maintaining our introducer channels. These can be typically private client solicitors, independent financial advisors, finance brokers, sometimes accountants as well, specialty accountants who deal with probate. Been here about 2 years now. Previously, had similar roles at a divorce litigation fund and a merchant bank.
And I said at the outset that it probably be worthwhile setting the scene very quickly around the products and services that Provira provide. Effectively, you are able to lend up to a percentage of the estate for the purposes of whether it's inheritance tax payments or estate payments, or even for people to get some of their money a little bit quicker because of all the issues that we've had with the probate office.
Sure. So we have two core products here. One is inheritance advance. That allows beneficiaries to access up to 50% of their inheritance pre or post probate within days, essentially, really fast at getting the money out the door if required. The second product is estate advance, and that's aimed at executors. And they also can access up to 50% of the estate value, and that is for any estate liabilities or costs that they wish to pay. Typically, that'll be inheritance tax, but it can be any other costs such as renovating a property. We've had people coming to us to do that to increase its value. Okay. There could be some existing debts that they wish to pay off, or even legal fees or surveyors, etc. So any expenses within the course of administering the estate can be covered by the estate advance product. The way the products work is they lend up to 50% of the estate value. Interest accrues monthly. It's rolled up into the loan and is repayable upon once there's sufficient liquidity in the estate.
Who's making that valuation in terms of the value of the estate? Is that a Red Book valuation you're using?
So we just look at all the documentation that's used in administering the estate typically. So any items which we are looking at, if it's a property, we'll want an independent valuation of it. We also have the ability to do some valuations ourselves of that nature, and then proof of any other assets, such as listed UK investments or bank statements. We operate in England, Scotland, and Wales currently. But yeah, we just require the information that's typically to hand when you're administrating an estate.
And how many monnets have you found in the attic?
So far, zero. Unfortunately, we don't have the ability to value them, so we won't take them into account.
Clearly, there is a growing marketplace for this. Provira are one of a handful of providers in this space. Is it fair to say you're seeing an increase in demand for IHT and beneficiary loans?
Yes, we've seen a huge increase in demand. We've gone through exponential growth in the last few years. And I think that's down to a couple of things. First thing is there's been an increased awareness of this type of lending. Provira was founded back in 2020. At that time, inheritance lending was pretty much unheard of in the UK. So over the last 6 years or so, we're still finding introducers and customers that have not heard of this type of lending. So there is an ongoing kind of education awareness piece. So I think that's one factor that's driving increased demand. The other one I would say is the increased value of estates. We're seeing far more estates than ever breaching nil rate thresholds and incurring an inheritance tax liability. That could be down to, I don't say, over the last 5 years or so, house prices have solidly increased in most areas, and nil rate still remains at 325k, where it's been since, I think, 2009. There was an increase to 500k if it's a property going to direct descendants, but still that doesn't touch the sides with a lot of estates. So yeah, I'd say those are the two main factors that I think is a reason for why there's an increased demand.
Just before we started the recording, we were talking about the budget back in November. I mean, lots of conjecture about what might or might not happen, but certainly from our point of view as private client professionals, that continued freeze of the nil rate band is having a massive impact on tax planning in general, isn't it? Or at least it should be. I mean, presumably what you're saying is that people aren't simply preparing and therefore they are facing liability for IHT.
In our business, we don't really see the people who have effectively sorted out their tax planning. So I couldn't comment on that. All I can say is that there is still a lot finding themselves with large inheritance tax bills.
I think one of the things that I think about, particularly with the estate loan, where you're able to effectively take an advance on whatever your inheritance might be, to me that feels as though people are impatient. You know, surely this is something that they could be waiting for, or is it the case that people simply don't have the liquidity to cover estate costs?
Yeah, so with our estate advance product, which is, as I said, most commonly used for inheritance tax, it is a means to an end. As you know, probate can only be granted once some or all of the tax liability has been paid. So in that scenario, it's a means to an end. They don't have the liquidity. They may not want to take out a loan themselves, and a personal loan for obvious reasons. So that there's no issue with impatientness in that scenario. With our inheritance advance product, where the beneficiary can get the money advanced for any reason whatsoever, there can be an element of impatience with that. They may want to pay off existing debts and pay for medical treatment or care. So I guess that's fine. We do have the odd one where they just want to go on holiday to the Seychelles or buy a new car. So I'd say that is impatience, but they're few and far between from what I see, being honest with you.
I mean, consumer duties had a massive impact on the lending space. And, you know, of course, businesses like Provira are regulated by the Financial Conduct Authority. How are you ensuring that you're complying with consumer duty and ultimately lending for the right reasons? I mean, you know, for example, is a holiday to the Seychelles the right reason? And you know, is it in your remit to make that call?
Well, as you say, as an FCA-regulated lender, we are obliged to ensure that vulnerable customers are identified and protected. So we have a whole range of processes. For example, frontline staff are trained to spot signs of vulnerability. They respond with empathy, and we can adjust processes and communications accordingly. We have a vulnerable customer identification checklist, which is run through during customer interactions, and we always insist on having a telephone or video call with them to help with that assessment. So, I mean, from a compliance point of view, that's how we identify vulnerable customers. If they're not vulnerable and they decide to borrow, then it's up to them what they spend the money on, really. As long as they're aware of the costs, and which we're always clear and transparent about that, then it's their decision, I guess, at the end of the day.
I was at a conference recently, and consumer duty came up as a topic of conversation. And I don't think lawyers, and this is a general sweeping generalization, so apologies for those people that do really fully understand the impact of it, but there was a feeling at the conference that the legal sector hasn't really fully grasped the impact of consumer duty. What kind of impact has it had on a business like Provira?
We haven't had any issues with lawyers kind of questioning or objecting to our products. Typically, I've never had it raised as a concern with any of our our introducers, who are, a lot of them are private client lawyers. I think maybe, I don't know, maybe because we're so clear and transparent with the way we operate, we simply make people aware of their options. We'll give them a clear outline of costs, and obviously with no obligation whatsoever to take out the loan. They're free to make the decision, so no pressure, etc. So I've not had anyone question it from a consumer duty point of view.
I suspect, John, that there'll be people listening to this who, are listening, probably don't fully understand, or may have not even come across this sort of funding before, but are pretty familiar with litigation funding for matrimonial matters. But I mean, there are some key differences that aren't there. Talk us through what some of those differences are.
Yeah, so with as I said earlier on, obviously I used to work in the divorce or family litigation funding business industry. So that there would be a loan that was taken out to essentially fund the cost of the divorce or family proceedings. And the way they differ from a probate loan is the lending metrics are similar. People could typically borrow up to 50% of their anticipated settlement figure, and that'd be, in that case, it would be a divorce settlement. The way they differ is they typically have monthly drawdowns on the litigation funding loans. So, and then they are paid directly to the solicitor or law firm representing the client. So I think in those scenarios, you do find, for obvious reasons, that the solicitors do tend to be a little bit more on board, because they are they're arranging to have their own invoices paid rather than having to defer them for 12 or 18 months or however long proceedings take. Whereas obviously comparing that to a probate loan, there's no pressing need to pay a lawyer. But there is a pressing need to pay your inheritance tax often. So in that scenario, it's something that has to be paid to get the desired outcome. So there is parallels there, but the main difference is that the monthly drawdowns, whereas with an inheritance loan, typically you'll apply for the advance and it'll get paid on day one. Those are the main differences. I mean, it's something we've looked at. We've possibly going into in the future. Quite a number of the people within the firm have got experience of divorce litigation funding, so we have been looking into that. But watch this space for that one.
Well, we'll come on to litigation funding in just a minute, John, and I have got a question around that. But before we do, just to finish on this kind of thought process around the engagement that the lawyer has in this whole process. In your role, you're obviously trying to get people on board in terms of using the product. Is there a typical scenario that the lawyer is going to identify as an opportunity for this sort of funding? Is there a kind of a telltale scenario that you can share with listeners that they might sort of spot and think, do you know what, actually this is a great opportunity for us to engage in these sorts of services?
So it would typically be the requirement for an estate advance that a lawyer would identify, and during the process of administration, they obviously start collecting data, information about the deceased estate, and the trigger point would be if there's an inheritance tax liability and whether or not there is sufficient liquidity to fund that from within the estate. If the estate's predominantly property, then obviously there's not going to be sufficient liquidity to pay off any significant inheritance tax. If there's part of the estate is in high street banks or in listed stocks or in investments or investment portfolios. Sometimes these organisations will release funds to the solicitor to make these inheritance tax payments, but often they won't. So I guess the process is, how much is the inheritance tax bill, and can we pay it from within the estate pre-probate? That's the question that estate administrators have to ask, and if they can't, that's where we can step in.
Is there a minimum estate value that you will lend against?
We don't have a minimum estate value, but we do have a minimum loan value, advance value, and that's currently £10,000. We don't have a maximum amount. We have several which are over £1 million currently that are ongoing on large estates. But yes, so anything over £10,000, we're happy to look at lending.
We are fast running out of time for the discussion, and before we finish, I suggested that I wanted to return to this litigation funding issue, because I think, to my mind, and this may very well be a freebie, John, from an ideas point of view, albeit you've probably given it some thought, massive increase in the number of estates that end up in dispute. Go talk to contentious probate lawyers, and they'll tell you it's absolutely on the increase. An opportunity there for a funder to look at that in the same way that you might look at a family litigation dispute?
Yes, so there has been an increase in contentious probate matters over the last couple of years, certainly, but it is a tricky area to fund. Underwriting is difficult from our point of view because many cases there's no guaranteed minimum settlement amount. So that incurs very big risk to us as a lender. Ways that I've worked at places before where they have tried to do that, and it's always been difficult, this type of lending. Typically, you would need counsel's opinion on likelihood of success and quantum, and I would expect that you would ask the client to fund that themselves, pre-litigation funding, which makes it expensive. You'd be looking at least £10,000 probably for counsel's opinion on a moderately complex matter. So there is these barriers to entry with it, and also how it differs from traditional inheritance lending is we can see with reasonable accuracy the value of an estate. Mm-hmm. When it becomes contentious, someone could end up with all of the money, someone could end up with none of the money. So that's a huge risk for us, and as our funding is unsecured, there'd be no recourse for us in that scenario. So it'd be very risky. So it's something that we haven't looked at doing. I think there is some funders say that they do it, but I've not heard of one getting off the ground. I may be wrong about that, but I've not heard of that happening so far.
Well, it's been a bit of a meander round probate lending, and I think it's a challenging area in the sense that, and you raised the issue yourself there, John. One, I don't think there's still a huge amount of understanding about what it is and the opportunities that there are for it. So it's been great to have you on to talk through some of that. And also, I think we've kind of raised the spectre of some reticence that people might have about using the services. But the fact that the organisations are all FCA regulated, this isn't any of the Wild West that we had with funeral planning or anything like that. Is really, really important point to make. So it's been really interesting to have you on, John. Thank you very much indeed for joining and for sharing your insight.
Thanks, David. No, it's been a pleasure.
The Today's Wills and Probate podcast is available on your preferred podcast provider. It's also available on todayswillsandprobate.co.uk. My thanks to John. Thank you as ever for listening, and we'll see you again soon.